lot of the details. So we think that they're going to talk up the economy. We think there's a possibility they're going to talk down trade. I'm really curious to see if we hear anything on the consumer or inflation today.
David?
Obviously no change, or obviously 25 basis points on rates. I think the really interesting thing is when they put in 2021 into their forecast, do they say that the unemployment rate stays below 4% for over 3 years? That would be the first time it's in fact ever happened. So I think it'll be interesting to see how long they want to prolong this idea of continued steady-state economic expansion.
2021 will be interesting. It'll be the first glimpse, theoretically, that we have in terms of the Fed forecast. But from an investing standpoint, do you really care what they say about 2021?
Well, yes, I do, because the real question is, this is an old bull market, and the question is, well, how much longer does it last? They may well implicitly say today that they think that the bull market's got longer to run, the economy's got longer to run, if they think unemployment's going to stay below 4% all the way through 2021.
Yeah. Michal Farr, when you get the statement in your hands, what are you going to be looking for?
I'm going to be looking for a couple of things, Melissa. I'm going to be looking to see if they change the language and remove that accommodative stance. I think that that's going to be important. And then in the markets, I'm going to be watching the bank stocks. I've been keeping my eye on Goldman Sachs, J.P. Morgan, BB&T, and PNC as big banks and a kind of a cross-section with some of the bigger regionals. Those prices are all down coming into this statement. I think we're going to see them go higher after the statement. This is an improving environment for banks.
David,
it should be.
I'd like to jump in and ask David a question. Last hour, Krishna Gua said that if they remove the language about being accommodative, that a lot of people might interpret that as dovish. In other words, that the Fed thinks we have gotten closer to the end of the rate hike cycle. Do you see it that way, or do you see it that it means that maybe they don't know where that normal rate ought to be, and that it leaves them wide open to continue to raise rates? How do you interpret it?
Well, I think actually it'd be confusing, because they have said that they feel that the normal federal funds rate is between 2 3/4 and 3%. We're still short of that. So if I were them, I'd leave it in there, say it is accommodative until we reach that point. Because if they don't, then we don't know what they think is neutral. And it also seems like that would be almost a benefit to, or a sop to the administration, saying, look, we get it, we hear you, we want to be a little more dovish. And I don't think they should do that. I think it's important. Look, if they say neutral is 2 3/4 to 3%, then they're accommodative until they get to neutral.
So you think that in the back of their heads are thinking, we don't want to look like we're succumbing to President Trump?
I think they really want to make sure, they want to steer clear of politics as much. They don't want to talk about tariffs, they don't want to talk about fiscal stimulus, and they don't want to talk about direction coming from Washington.